Welcome to the Quintessential Real Estate Podcast. I'm your host, Quinn Shalloway. In today's episode, I've got Ward Kerlin on with Loan Depot. We're going to be talking about the fall of rates. Maybe there's some more rate cuts, which will directly affect our industry and kind of what that will result in the next, hopefully, couple months, 6 months, 12 months, when a refi is happening, any other cool products out there. So thanks for coming on, Ward.
For sure. Thanks for having me.
Yeah. So let's just give me an idea of how we got where we are right now with rates.
So right now, I mean, we are at, several months lows. We're below 6.5 right now, the 30-year fixed at the moment, based on the data you see on like Mortgage News Daily, things of that nature. How do we get here? The Fed and its conversation about the jobs reports versus inflation and so forth, that's their dual mandate. They want to make sure we have inflation that's under control. And we want to make sure we have a strong jobs market. We got a lot of jobs data this week, and a lot of people will argue that jobs data is more important than inflation right now, because inflation, for the most part, has been pretty much in check.
Yeah.
But jobs has been a strong market for several years. Mm-hmm. But recently, we're starting to see some softening in that market. And subsequently, this week, we had our JOLTS report on Wednesday. We had ADP today, and tomorrow we'll have BLS, which is the Bureau of Labor Statistics.
Okay.
All that data is coming in a lot softer than expected. So now we're starting to see the bond market react to that. And if you recall, when we've talked in the past, it's not so much when the Fed drops rates, it has more to do with the data, with the market data. And this market data and the bond market is going to react to that much more quickly than when the Fed speaks next, later this month about whether or not they're going to drop rates. Mm-hmm. So subsequently, we have seen a nice trend in rates. Treasuries or mortgage-backed securities have done very well. The 10-year note, which is kind of where we track and so forth, and based on the spreads, will kind of show us where our rates are going to be. Mm-hmm. So with that, if we continue to see this trend, I think it gives the Fed, and Powell some artillery, if you will, to feel comfortable enough to drop those short-term rates.
Yeah. So they've signaled that they're going to do rate cuts? Or how's that looking? We've got 2 jobs reports. I heard September. I also heard there might be 2 others this year.
Potentially. Yeah. And it really is going to depend. So we're starting to see some dissension among the ranks at the Fed, right? Because we've got a Fed that's somewhat divided now. Several of the Fed presidents are saying, hey, we're really, really comfortable with where rates are, and we don't want to, drop rates too drastically. Mm-hmm. Whereas we have some others that are more in favor of where the administration, Washington, where the administration's policies or want them to go as far as rates. They're talking emergency rate cuts, things of that nature. I think that would be over the top, really drastic, and could potentially do more harm than good. Mm-hmm. Short-term gain, long-term pain, if you will. So that being said, though, based on the Fed's comments last month, it does look pretty promising now. And now they've got the fuel with the jobs reports to go ahead and do it. Now, I think they're anticipating at least a quarter. So if we get a quarter-point drop this month in those short-term rates, you're probably not going to see a lot of activity in the mortgage rates because, again, bond market's way ahead of that. Mm-hmm. Right? They're already priced in.
Yeah, this is priced in.
So we are where we are at the moment. That being said, if by chance they surprise us and throw us a curveball like they did last year this time, if you recall, we were looking for a quarter. We ended up getting a half-point rate drop. So that could bode well again for mortgage rates. But again, I sound like I'm talking out of both sides of my mouth.
Oh yeah, no, I mean the last couple years we've been in December and they're talking about rate cuts. There's going to be 6 rate cuts this year, and that's going to affect everybody. And then it never happens. So I always tell people, until it happens, there's no way to bank on that. And that's kind of how I talk with first-time buyers who are thinking about buying a home right now. It's like, should we wait till rates drop to buy a house? And I'm like, well, 1, we don't know that rates are actually going to drop.
No, we don't.
2, there's a whole nother discussion on why you should buy when rates are where they are.
Sure.
So I would just say, the rates are what they are. Like if it makes sense for you to buy, or if it's more palatable for you to sell your home because the rate has finally come closer to the level that, you're in a mortgage with at this point. But it's just always this just moving thing, and you can't time the market for rates. I'd rather you get into a home and then refinance versus, competing with the masses. So
yeah, because you can't look forward that far. You just can't. We've said this before. You can't time the market. We don't know, even if they do drop short-term rates, Fed funds rate, will that positively impact mortgage rates? Because they are not lockstep.
Yeah.
Right. So, and if you recall last year, this time in October last year, when they dropped rates a half a point, it was already baked in, and for some reason, mortgage rates spooked back up again. So there isn't an absolute correlation between the two.
Yeah. I guess, what would you as a loan officer say to a new buyer they're probably just it's their first time, they're out looking for homes and saying, yeah, should we just wait till the spring? Should we get started now? What are you kind of recommending to them?
I always tell people, you just don't try to time the market. The people that quote unquote time the market properly got lucky.
Yeah.
That's all. They're bragging at the water cooler, right?
Yeah.
Say, hey, look what I did. I'm like, you know what? You got lucky. You didn't know any better than anybody else.
Yeah.
So to your point, you buy a house because you have a need, right?
Yeah.
Your family is growing. Maybe you're downsizing. There's all sorts of things. You're getting relocated. You buy a house for a need, to fulfill that need. And regardless of when you buy a house, if it's a long game, right? This is a long-term play. You're not buying a house for 2 years. You're buying a house for 10 years.
Yeah.
Most of the time, that's how long people usually hold on to a home. And in that time, you're going to see appreciation, either in principal reduction, appreciation in the value of the home, or a combination of both. Now, could we see a slight correction? Sure. But again,
what do you mean correction?
Well, what if prices of homes drop down 10%?
Yeah.
Could happen, right?
Sure.
Absolutely could happen. But if you're hanging in there for the long term, it's just like being on the stock market.
Yeah.
You have a 401k, you don't have it for 5 years.
Yeah.
And say, hey, I'm going to retire, right?
Yeah, you have a bad day every now and then.
Most people in this economy that own homes and have retirement funds, and I'm kind of bringing that all together, they've done well regardless, right? So getting into a home, being a homeowner, that brings a lot of value. On top of being, say, in the stock market, is you can't live in a stock, but you can live in a house. Right?
Yeah.
So there's that's my spiel.
I've never heard that. That's funny. I like that. Yeah. So if it makes sense to buy now, if you're listening and you're thinking about buying in the next 6 months, it's like, if you have the need to do it now, there's no shame in getting out there and figuring out what is affordable at this exact moment. And if that fits your needs, then there's no reason not to give that a shot. And usually I tell people, buying a home is not really a one weekend thing. It can take multiple weekends to get different homes. So it might actually work with that 6 month plan that you have. But yeah, I look at it with all of this buzz about rate cuts, and it feels like I'm just repeating myself every 12 months around this time. And we have. Yeah. But this one seems a little bit different because this is the end of the Fed chair, Powell. So no matter what, that does change. And this administration is saying, hey, we want to see cuts, and it's probably going to be, that's the type of person who's going to be put up there for it. So all the messaging is going that, and also the jobs reports and whatnot. It's all looking like that, and eventually we'll get there. So with all that in mind, I kind of feel that some more inventory might come on, because some people will say, hey, that 3%, mortgage we have, it's closer, so now we can get out. I have a lot of friends who bought a house 4 years ago, and since then they've had 2 kids, one kid, they've grown out of their home, and it's time to move on, but they can't move on because they go, Quinn, I just the other day asked they're like, what are rates? And I'm like, yeah, they're like 6.5. And he's like, oh my gosh, I put that in, I can't afford anything because it's double the price of the what I'm paying now.
Houses have gone up, rates have gone up. It's exponential.
Yeah, it's tough. But I would say if all of those things are true and the rates come down, maybe there'll be more inventory, but there'll also be more competition. So we got to be ready for everything.
Right. Well, and that just lends it to the same conversation I have with anybody who's looking to buy a house. They're like, well, should I get pre-approved now? But yes, just do it now, because you never know. I mean, we're going into the fall season, we're going into the holidays and so forth like that. And we've said this time and time again, that might be the best time to buy a house because less competition potentially. You know, I'm going to wait for the spring market. Well, so is everybody else.
Yeah.
So do it now. Buy yourself a Christmas present. I think I said that last time.
You probably did. Yeah. I mean, it's a good point. And it's just, I mean, this is just conversation for us, and the way, you know, we're always, a market obviously has a spring market, it has a summer market, and then this is when it gets slow. But it is true in most, you know, you can sometimes get a deal, or you're just not competing. Maybe you can, you know, you're not competing against multiple offers. So maybe you can get that home inspection. Maybe you can get that appraisal contingency. You're not doing an appraisal gap coverage if you're a buyer. And
you and I have seen that too. We're
yeah,
starting to see that happen. You know, the buyer or sellers are becoming a little bit more forthcoming with allowing for those inspections and things of that nature that we didn't see 3 years ago, 2 years ago. That was unheard of.
Yeah, but you know, right now, if this is the opportunity to get, I always tell people, it's like, look, if you're going to buy in the next 12 months and you can do it now, and it's not like there's always going to be a switching cost for you to buy a home. Your environment will change if you buy a home now. Like, hey, you're having a kid. I want to wait till the kid's, you know, here before I buy the home, or I want to get this promotion at the job before I, you know, make this change. But if you're thinking, okay, it looks like rates are going to shift in a positive direction for us. So you could look at it like, well, if I buy now, then I can refinance later.
Refinance,
I mean,
6 months down the road. If
yeah.
you wanted to.
Are you seeing now with that question? Are you seeing these ARMs picking up momentum right now, or are you putting people in ARMs, or are we just in 30-year conventional products?
I would tell you that there's a lot of conversation about it.
Yeah.
There's a lot of talk about this administration wanting to really push ARMs. I don't know how true it is, but short-term money, if it can be cheaper, I'm kind of all for it, quite frankly.
How cheap are the ARMs right now?
You might get a half to 3/4 point less on a 5-year ARM.
Okay.
So if you're at 6 3/8 today, you're going to get in the fives. It's going to have 5 handle for sure, and that can be a big difference on a $400,000 mortgage.
Yeah.
Right. Subsequently, you're still good for 5 years. It doesn't change for 5 years. So in that time, you refinance in 3 years, and you might improve that, either improve your rate, improve your term, or both. Right. So I would love to see that. I've been saying that, and I think every lender in my position has been saying, wish we could do that. They weren't priced competitively based on, I guess, an inverted yield curve and things of that nature. We are starting to see some other products though that are. So what we have typically that we lend in is that Fannie Mae, Freddie Mae box. They're called qualified mortgage, conventional loans, things of that nature. We all underwrite to the same guidelines. However, there are what we call non-qualified mortgage, non-QM. You probably hear that every once in a while now. And they're just alternative loan structures or loan options that might fit better for, say, an investor who's looking to buy a 5 or 6 unit that we can't do in the Fannie Mae world. Well, because we can only go to a 4 unit. And instead of underwriting the buyer as much as we now will be able to underwrite the property, kind of like a commercial loan almost, only it's a 30-year fixed product. It's pretty cool. It's called a debt service coverage ratio. As long as your ratio is at a certain number based on cash flow, you're good to go. And we can close them rather quickly. That's one. There are bank statement programs again now where we can calculate income for a self-employed individual based on 12 months worth of receipts in their bank statements. Asset depletion and so forth. There's a bunch of other options out there that are a little more, we'll call them creative. Not going back to 2008.
I was going to say, this all sounds...
No, it's not there. These are not liar loans. They're they just look at things differently. All right, if that makes sense.
So if I'm a seller processing what you just said, hey, we're going away off the script of Fannie Freddie, are these easier loans to underwrite? Like, how, if I get an offer on my home with a non-QM product, what should my agent be telling me?
Well, in most cases, these non-QM products are I don't utilize, I wouldn't utilize them for somebody buying their primary residence. That's still kind of a Fannie Mae Freddie situation, FHA, USDA, things of that nature.
Yeah, but if you see someone buying, if you see a buyer using a non-QM to buy your home and possibly make it a rental or something along those lines.
I just would want to see the commitment letter. That's all.
Okay.
Just want to see what's going on with that. Tell me about it. And my concern would be, what's their credit score? And do they still have to have cash?
Yeah.
Right. You still have to have 20% down. So I just want to make sure that they can verify assets.
Okay.
Right.
Without speculating too much, what do you think this spring is going to look like?
I'm going to tell you what I'm hopeful, and I've been saying this for a long time, for several springs in a row. But I am hopeful that we do start to see in 2026, we do start to see rates in the lower sixes.
That feels completely possible.
Yeah. Well, and that's why I don't want to overreact, say, we're going to see it at 4 handle. I'm like, no, I might go there.
Yeah.
But the data suggests that if we get into the low sixes, things start to open up a little bit. You get more sellers that are interested because they to your point, they're looking. You've got friends that have bought their first house and they want to now, get out of their 3% interest rate. If we can get that starting in the low sixes, that start to feel a little bit better. We're starting to get this has become more normal, if you will. And quite frankly, it's people say these rates are high. Yes, compared to 2020, 2021, of course, but that was an anomaly. That's a once and maybe twice in a lifetime situation. In my years, it's once, right? So I do think that this will help our spring market. I'm hopeful that we do start to see more inventory. We are seeing it around the country. However, our country is kind of divided with respect to inventory. If you look down in Florida, Southern California, some of those Texas, things of that nature, there's a lot more inventory than there is in the Northeast, and it's been like this for a long time. You and I have discussed this on many occasions. We're somewhat insulated from those massive price drops, where other areas of the country we're starting to see, price decreases across the board. We're still seeing a competitive market here. So I don't see that changing anytime soon in our area in the Northeast corridor. Inventory is still going to kind of be an issue. We just don't build enough homes, So if rates do drop a little bit more, we will see, hopefully, if money's a little cheaper, that's going to help that situation too. I don't think that we're going to see a huge correction though in the Northeast. I just don't see it happening. And even way back, in that 2008 time frame, we didn't see massive changes here like we did in Florida and so on. So
it's so hard because there's already not much inventory to be had now, and like you said, there's nowhere to build. I mean, don't get me wrong, if you're in Berks and northern end of Montgomery County, in Bucks County, I mean, there are developments going in, but also they're expensive. They can get a little pricey, and that's a whole problem too.
Well, there is talk in this administration to make housing more affordable, and it's
what do you think of those comments?
So
they're
short
an emergency, right?
Right.
They were talking about that the other day, which I don't love.
I don't know if it's an emergency.
Yeah.
I think that's a strong word. But, if they were to loosen up anyway, and it's more along at a state level, but if there could be some federal incentives to open up building to a point where the permit process is a lot more streamlined, it's not as costly, things of that nature, that might help a little bit with inventory in these areas,
Yeah.
So they talk about that a little bit. They don't know that they can do much more than that, really, and that's just that's going to move the needle a little bit, but not drastically.
Yeah, I mean, if rates come down, that would move the needle for a lot of places. But it'll be really interesting. I'm excited. I'm still, going back to what we were saying earlier. If you need to buy now, or if you need to buy in the next 12 months. I still think there's enough momentum for you in this moment there's not a lot of pickings out there in our markets at the moment, which, hey, that stinks. And some people are not, down to wait. They like to just jump in and then, execute, point and shoot, buy your home, be done. And it's like, Quinn, I don't want to take 6 months. But what if you were basically looking through the time that, hey, this is not the in season for looking for homes. It's around holiday seasons. It's in the fall. But, you end up finding that home during that time. It took 3 to 4 months. By the end of the year, you find a home. Like, isn't that's a good thing? You didn't compete against, multiple offers. Or you could wait and, no matter what, there will be a spring market. It won't be just flat. Like, obviously more inventory comes on because, like you said, that's when people move. I'm just telling people, it's like, if you start now, you might not have to compete. Like that is the benefit of looking during this time. And then hopefully you're just refinancing.
And if you don't get a house, you've got the experience of,
oh yeah, by that point you're ready.
So you're nothing's going to shock you at this point, because I still think people get into this market not realizing or not listening to what the market has been saying, how competitive it is. And then they get into it and they go, oh yeah, you're right. Well, there we are.
Yeah.
So,
well, the thing that always cracks me up is when people they're like, yeah, I can afford this. Let's go see it. And I said, well, have you talked to, a loan officer, getting yourself pre-approved? And they go, well, no. And it's like, well, you may think you can afford it, but you don't know. It's like, just get yourself pre-approved. So we don't.
It takes 20 minutes.
Yeah, it's not difficult at all. People think it's this
big
production.
You can do electronically now.
Yeah. So. And just go, like you said, it doesn't hurt to go get a pre-approval now if your plan is 6 months from now. It's like, hey, get your budget. Get your budget in line.
Yeah, it's electronic.
Figure out what makes sense.
Do a soft pull of credit. Doesn't affect your score. It's easy peasy.
Yeah. Talk to me about that. So soft pull versus hard pull. Like if you're going to get a full pre-approval done with a soft pull, that sounds pretty good, because everybody says like, I don't want to get a pre-approval because then they'll have to run my credit. It's only good for 90 days. I'm not buying. What's that?
We'll do another soft pull in 90 days. I don't have to initiate a hard pull on credit until we actually have an executed agreement.
Okay.
So, at that point, get prepared for some phone calls.
That's mm-hmm.
Now, is
that going to change all this?
Yeah, there's talk in Congress about that, and it has been for a long time. They've tried to, sneak that in with some other bills. Mm-hmm. I mean, it's just the right thing to do, but I think it's going to happen sooner than later. I think last I heard that was in a bill actually to be executed on, but we'll see what happens.
That's good. Here's a good, we're going to just kind of pivot to what is interesting. So primarily you're doing loans. I mean, you do loans everywhere, right? Sure. So PA, New Jersey, where else are you licensed?
PA, Jersey, Delaware.
Okay. Yeah. So, and then the lion's share is in PA.
Correct.
You would say, because, so Chester.
My backyard.
Yeah, your own backyard. So Chester, Montgomery, Bucks, Berks, Delco, Philly. What are you seeing from feedback from your buyers right now who are submitting offers?
Well, I mean,
or hey, we didn't get this one.
It's interesting. I am seeing more people coming in, and they used to. I mean, I still have people that have been in my pipeline for 2 years that haven't gotten a house yet. But then I have somebody who's looking at a house, and for whatever reason, it needs a little bit of love, TLC. It's got pink tile in the bathroom, things of that nature. And this house didn't get a lot of activity. And they get it on their first offer.
That's the best.
Right? So that is nice to see. You're starting to see FHA and so on maybe getting, and VA loans getting a little more love as well, where, 2 years ago it was all conventional. So if you try to get an FHA or VA loan and you had to really sell it, I think the VA loan should supersede everything. I think it's the best loan out there, and we're doing it for the right reason, So
that's a good point.
Yeah, but
I like that. I like that point you're making about. Seems like homes are starting to sit a little bit more. We're still getting price.
Yep.
But the product changes. Like that VA 3 years ago was a really hard sell if I'm on the buyer end to the seller. And they're like, I got a conventional product here. It's Supreme or whatever. But I agree with you. Aside from what's the quickest you can close a VA loan?
It doesn't take any longer than a conventional loan.
Yeah.
It just doesn't. Nothing about the underwriting process is significantly different that it would alter the amount of time.
Yeah. Yeah. So markets like this, when it's slow, I mean, because it's definitely slow. For the first time in my career, and I feel bad saying this, I'm like, it kind of knocked me down a peg, but it's going to happen. I've been in the industry for 8 years. I had to withdraw a listing for the first time in 8 years.
Yeah.
And the market, like, just not enough showings.
Yeah.
Like, we just weren't seeing it. And they're like, hey, Quinn, we're just going to pull it off and rent it. So that's what they're doing. But, it's like, if anybody were to just say, like I say to sellers, like every day there's a new purchase application through a loan officer, and then they're going to start looking at homes. So it could be your day, type of thing.
For sure.
But if it's a VA and they go out there, it's been sitting for 20 days on the market, they could submit that offer and the seller would be more than happy to, try that one out.
Entertain it for sure.
Yeah.
I mean, again, from an underwriting perspective, there's really no difference than a conventional loan, with the exception of the appraisal. And they just want to make sure the house is safe. That's the only difference I can think of. Mm-hmm. And at the end of the day, are you going to sit there and deny a veteran who's, fought for your freedom because of that? I don't know.
Yeah.
I've thrown that out there once or twice. So, and again, great loan. And it's a great benefit for our veterans.
Mm-hmm. So thanks for coming on the podcast, Ward. Really appreciate giving a little bit of a market update for us. And, so hopefully rates drop and we'll take from there. But if it doesn't, it's just like, keep in touch. If you are pre-approved with a lender right now, just keep in touch with them. Yep. I mean, they should be keeping in touch with you, but keep in touch with them and just say, hey, if rates do drop, what's this going to do to my purchase power? And, should we be thinking about buying now or should we think about selling now? All those conversations, have it with your professional realtor, your loan officer, and just, keep it a conversation. Don't just wait don't react. Be proactive. Be proactive. Yeah. Don't do that. So anyway, thanks for coming on board. Really appreciate it. We'll have you back soon.
My pleasure. Thanks.